Want to make sure to spread that risk out a little bit because you never quite know which market's going to perform that good. So let's make sure to take as little risk as possible and make sure the return is as high as possible, or so the theory goes. Hey, thank you for checking the channel out today. My name is Agabus. This is your financial education channel. When you're talking with financial advisors and financial gurus, a lot of them will recommend and discuss using diversification to lower the risk, but to get the optimal amount of return. Now, diversifying really is just a way to say, I don't know exactly which horse is going to be the best, so how about we bet a little bit on everything? And then that way we can make sure to get some sort of return over time. The issue I have with diversification primarily is that none of the billionaires in the world diversify. If you look at some of the top billionaires around there, you're going to see Elon Musk, Larry Ellison, Jeff Bezos, and the list goes on. You can go down the top 20 different billionaires in the world of last year. Every single one of them is going to overweight their particular company and put all of their time, energy, and effort into that as it continues to grow. So diversification may work for most of us, but if you look at all the billionaires, they tend to not use that as a strategy. Again, now what is diversification? Well, if you take a look at history into the rear view mirror, you'll take a look at different sectors. This is from jpmorgan.com. It takes a look at the guide to the markets to see, well, which performance was the best in which sector, given which year. And of course, we can't time the market. There's no way to predict what the future is going to hold. So how about we take a look at all these different areas and we create a pie graph and spread the risk out amongst everything. That way, as you can see in this chart, we get kind of this average middle ground here for an asset allocation or for a diversified portfolio. However, if you were able to time the market, if you look at the far left here and you put all your money into large cap stocks, that would be the best horse in the race. Now, every financial company is going to have some sort of diversification or asset allocation graph. You can find these all over the place. The more aggressive portfolios will have some sort of heavy allocation in the stock market, not as much in bonds and cash. However, let's go back to the billionaire idea. Now, if you diversify with the best horse in the race, and then you start to really overweight what that best horse is, well, gee, you might have a pretty good horse to put the money onto. This is not financial advice. Make sure you're talking to your financial advisor. However, Bitwise has done a little bit of the research for us to say, well, what happens if you did diversify a traditional portfolio? Traditional meaning 60% of the account is in the stock market, 40% of the account is in bonds or cash. But what if you have a small sliver of a sleeve into Bitcoin? As you can see from their research, 1% allocation, 2.5% and 5% really perform pretty well. The overall risk does go up, but the overall return significantly goes up as well. Now, what they're not going to show you, because it's not part of the traditional financial world, is what happens if you significantly overweight Bitcoin. What if you had 10, 20, 50% of your allocation into Bitcoin? Plenty of the OG Bitcoin folks who just put a little bit of the money in, now it's probably 99% of their wealth is in Bitcoin because they bought it at such a small price. So I would argue that diversification, although is very commonplace in the financial world, if you really want to make the money, you may want to think about overweighting certain areas and really doing your due diligence. Of course, we are going to be biased toward the new digital revolution using blockchain technology, and in particular, I should say only, Bitcoin is going to be the horse that we're going to take a look at here and really make sure you're doing your due diligence to make sure you have a good understanding of what Bitcoin is, how it operates, and why there's so much hype around it. Not financial advice on this channel, just education. We recommend that you increase your financial literacy, and I hope this channel is beneficial to you. Now, I've shown some of these charts here before, but just to reiterate again, this is JP Morgan's research. If you look at a 100% stock portfolio, 100% bond portfolio, and that traditional 60-40 blend, over time you'll see that the highs and the lows are not so high and low if you start to diversify. And then how are you going to diversify? Well, you can just pull up an asset allocation graph for any financial company that's out there. And what they will do is they'll take a look at some historical numbers like this, have a little bit allocated in every such sector, and then they're also going to use some graph like this to see, well, how is every different sector correlated to the other? So that way, again, you're putting a little bit of money on all the different horses because you don't know which one's going to be the winner or not. That's how you diversify risk, spread the risk out. Hopefully there's still some return at the end, but it's probably going to be an average return versus putting all of your eggs in one basket, which has always been recommended to not do. But I do think if you're able to take the time, do the research, and make sure you've got very high confidence in what you're doing, overweighting a certain area or a certain sector or a certain type of place to put your money, aka cryptocurrencies, broadly speaking. And again, we're biased toward Bitcoin here. I do think there's a lot of benefit to making sure you've got a good understanding of what you're investing in. This channel, again, is for financial educational purposes only. I hope today was helpful. If you did like what you saw, make sure the like button below. Subscribe if you want to see more content. Drop a comment if you like what you saw. If you want to see anything else on the channel or any sort of feedback on how we can make these better, would love the feedback. Thank you so much, as always, for listening and following along. As always, stay inquisitive, stay informed, and stay subscribed for more. We will see you next time.